Hi, everybody. This is Trading Bitcoin with Tone, and Tyler and I are on today. It is a gorgeous day finally in DC because it has been pretty nasty. And yes, Bitcoin, traditional markets, a lot is actually going on. Obviously, Tone's been following Lyft. Uber's IPO is this Friday. Actually, I will stop talking and send it right over and then ask really hard questions as soon as I can. So, hi, Tone. You look like you're back.
Hey guys, yeah, I'm back in the US for a little while. After Mexico, we got consensus coming up. Leah, you're coming here. It's going to be crazy. It's going to be interesting, and it'll be a lot of fun. I'll see you here.
Yeah, I think that they're playing with me moderate a mining panel with everybody knowing how bearish I am. So I think that they're just making me the bad person of the conference. So it's going to be really good fun. And I will see you in New York for sure. And Tyler, how are you doing?
Hello, everybody. Great to see you. Important day today, not in Bitcoin, but in the stock market. And so we'll take a look at that. I'm still pretty much uninterested in what's going on in the Bitcoin market. I think Tone is going to take a quick look at that. Still think lower lows are coming. But stock market is very, very interesting all of a sudden. And so are some other markets. So this will be fun.
By the way, Tone's last show was incredible for anyone that hasn't watched. Absolute shout out. And yeah, the markets are no small. Up.
Oh,
but first, let's start with Bitcoin.
All right. Let me. I'll do this. Okay. So let me go straight to screen share. Yeah. So this is that last video, and in that last video, I want to pull this up. It's just on pause from my last video. I really do recommend it. I really think it was one of my better ones. I want to start cutting out like little pieces and putting them up, but like I wouldn't even know what to cut out. So I wanted to, and I try not to fly during the day. I try to be more productive. I try to fly like red-eye flights overnight, so I just get to pass out and sleep. But this was a day flight from Mexico, and I wanted to put down these like percentages just to show people what I'm thinking. I didn't even realize that everything is going to be at 40% towards tops or bottoms, but it is what it is. And I did want to get your thoughts, Tyler. You told me that you did watch that video that I did, my last video, and I thought it was very good. I think it was my best one where I was by myself without any guests. Just general thoughts on anything I said during that video that, caught your attention. You want to, mention, you want to, disagree with something. I just take the floor for like a few minutes. I'm really curious because I didn't realize, like when I start these shows, I don't realize how they're going to go and how they're going to end. I could be just yelling and cursing at the live viewers, or I could be like in a zone and do something really cool. And this was one of the cooler ones.
It really was on a number of levels. The most important one is what you're showing here are the most important asset classes over this time period of about 6 years up until 2025, in my opinion, because of the macroeconomic situation. Either gold and silver are going to play a role, and or Bitcoin is going to play a role, and or the US dollar is going to play a role, and or the US stock market is going to play a very important role in the solution to the problem of world debt. And I don't think Tone put this together for that reason, but the more I thought about it, the more important this is. And I'm even going to give this a shot myself. It's going to take a lot of thought because things change. But what I really liked about what Tone did here is he's showing people that over time, not only does price change, but probability changes. And that is so essential to understand. When Tone had the super show that ended up with 50 or 55 or 60,000 views, where he had 6 people, all with different perspectives, try to answer a very simple question. Is the bottom in? In other words, have we bottomed at 3,100 and something? And the show went on for hours, basically trying to answer that very simple question. And what came out of it was a disparity of views. Yes, it's in. No, it's not in. But the confusion that came down from that in Twitter and in the chat and in comments that Lee and I have been listening to show why the way Tone has shown these asset classes and the probability of bottoms or tops being in is so important. As the days and weeks and months go by, depending on how the price either goes up, sideways, or down, all the probabilities change. It's not just the price. In fact, it's very rarely the price. One of the things that Lee and I have been talking about forever is that the long-term trend is the thing you always want to focus on. When you look at the first column that Tone has under Bitcoin, for example, fourth quarter of 2018, first quarter of 2019, that is in the past, and that was a short-term period of time. But then when you go out to the second quarter of 19 and the third quarter of 19 and all the way up to the first quarter of 2020, even if prices just stayed exactly where it is now, around 5,700, what happens is probabilities change. And when people realize that, investors know that, speculators don't know that because they don't have a long period of time in their mind. They're thinking about what's going to happen today, next week, maybe in the next couple of weeks. And so when they try to comment on long-term things happening, like, is the bottom of Bitcoin in? I answered with only a 20% probability that 3,100 was a bottom. And the reason that number is higher for me than my ultimate bottom of 1,000, which I put at a much higher level of probability, is because if the price today drops from 5,700 back down to 2,800 and establishes a new low, then Tone and I win the bet. It's not really a bet, but we were correct, and Ben Zen would be correct, that the bottom was not in at the time Tone asked that question. But then what happens if we run from 2,800 up to 6,000? If you ask me at that point, is the bottom in? My answer is going to be no, it's still not in. Why? Because it did not get to an ultimate bottom that I'm looking at. And we could actually break 3,100 and hit 2,800 and then rally up to 5,000 and then come back down and hit 2,400 or 2,200 or 2,000 and then rally back up. And if you ask me, I will answer the question, no, the bottom is not in. So the terminology discussing trends has two very important variables. And Tone did a brilliant job laying it out graphically so you can see what his thinking is as time goes on, but also as prices change. So I think this is a big step forward in the display of information that encompasses the truth about markets.
Thanks for all that, Tyler. And I just want to point out, because I'm already looking at the live comments that people are commenting on this chart, and they clearly didn't watch the video and they have no idea what this means. I am not saying that gold is going under 850, I'm not saying there is an 80% chance that gold is going to fall to below 850 by the end of the year. That is not what this says. This says that if gold falls below to 850 by the end of this year, there is an 80% chance that the bottom in gold is in. But that also implies that you fall below 850 and start to bounce, because until you see things actually start to bounce, they can go all the way to zero. And yes, gold can't go to zero because, you know, someone can tow, someone could be working on a project to tow some asteroid and quadruple the amount of gold on our planet tomorrow, right? Like, you don't know what's happening. So yes, gold can go to the price of copper. It's very possible that in the future, gold will be less rare than copper. No one is actually working on synthesizing copper in a lab, but people might be working on synthesizing gold in a lab, right? So it's very possible that, that gold prices can always go lower. So this is not what I'm saying is going to happen. This is my probability of, is the bottom in by percentage.
Exactly. And that's the important point, that as you hit different levels in any market with any asset class, as you go up, you're getting closer and closer to an ultimate top. It might be 4 years away, 6 years away, 8 years away, but you are getting closer to an ultimate top. Therefore, your probability begins to shift from what it was a week ago or a month ago or a year ago or 5 years ago. And you can take any market. Bitcoin's a great example of that, most people that were in the crypto space up until December of 2017 didn't think in those terms, didn't think that you could get to a top that would then drop as far as it's already dropped, and I still believe it's going to drop more. But the probabilities is every time you go higher, you're getting to the point where exhaustion or capitulation is going to start setting in. And the same is true on bottoms. And that's exactly what you're looking at here. I'd be very interested to hear Tone's explanation of the chart for the S&P 500 and the Dow, because he and I are in agreement that this bull market, maybe later this year, maybe next year, maybe the year after that, depending on a lot of things, has the potential of surprising almost everybody to the upside. And today was a very good example of that kind of thinking, where so many people have been saying, Tyler and Tone are telling people to buy at the high of the stock market. Well, that's what they were saying before the market ran up, and now have established new highs as of just several days ago. And then we get a news announcement, and over the weekend, everybody thought, well, now the top is in, here we go down, and then you have a big reversal in the day. So anyway, I just love the way, and we can do that with every asset class. Leah's very interested in us looking at corn today, because she's saying corn's hitting 4-decade lows. We'll take a look at a couple of things. It doesn't matter what the name is. It doesn't matter if it's copper or gold or silver or sugar or Bitcoin or the stock market or the Turkish lira or a currency or whatever it is, they all do the same thing. They go into short-term moves, intermediate-term moves, and long-term moves, and then they reverse. Everything always has, everything always will. And what we're debating now is gold, was the peak at 1923, is that going to hold for a year or 5 years or 10 years or 20 years? Or like 880 on gold lasted all the way for almost 20 years before we were able to get back to that point. I've talked about the stock market hitting a high in 1965 and couldn't get back above it until 1982, 17 years later. The Japanese stock market hit a high in December of 1989 and is still 30% below that high. And now we're going on 30 years after the high was established. So I love that little box that Tone has got. If you're confused about it, go back and listen to his last video and how he came up with it, what it means, what it explains. I think it's a powerful tool.
Yeah, Tyler, gold, 28 years it took to break the high, not...
Yeah, unbelievable. And believe me, there were gold bugs for that whole 28-year period. And,
oh, yeah.
And my warning is on Bitcoin that maybe the bottom is in. I put a 20% chance that it's in. But the probability is that we have got a long way to go in terms of time, not necessarily in terms of price, but in terms of time before we get to wherever we're going to go. If it turns out to be 3,100, so be it. If that's a year from now, 2 years from now, 3 years from now, and it's still messing around here, just be prepared that that's the way markets work.
Hey, Lee, am I missing something on corn? I only see a 10-year low, and not even that.
Are you on the futures? Oh,
Yeah.
you're weak. It all happened today.
What happened today?
The news, it's because of the tariffs with China.
Oh, so it's not reflected in this chart yet?
Yeah, I haven't looked at it. We can check that out. It looks like it goes.
Are we talking about corn or wheat?
2007. Somebody might have just misstated it.
Was it corn or was it wheat?
So my understanding, right, is that all like grain markets have been driven to a 42-year low because of what's been happening with the China stuff today. But if it's not reflecting right now, then
yeah, it doesn't look like it. Commodities in general are hitting very low points, and a big part of that is because the dollar is hitting new highs. But it looks like, well, some of these could be getting close to bottoms, or to the 2006 bottom. 2001 through 2006 were lows in almost all commodities. That's where gold bottomed out at $265 before running up to $1,900. And then we've been in a downswing ever since about 2013 in almost all commodities.
Yeah, we might have to take a look at that another day and just retake a look at the news. All right, yeah, but Tyler, on the S&P, real quick. Now, we're on an 8 candle weekly. We started off Monday very badly, but now it looks like we're doing okay here. Bounced off. So this is a crazy day in the S&P futures. I didn't even realize it. And like I said, as this rally started, and I said that I did not expect 3,000 to be broken this year. So I'm actually curious if I'm going to be right on that. I think the S&P is due for a correction, but I also believe that we will not go below this low in this year. So it's a combination of, yes, the S&P is going up too much too fast. It has already made new highs. It has divergence once again if it turns, and it needs to pull back. Needs to pull back for more than a single week, like it did back here in February. It needs to, sell in May and go away may work once again. But when people say sell in May and go away, it seems like it's so easy, but it's not. The reason why it's not easy is because May has what, 30 days or 31 days? It doesn't matter, right? May has 30 days. So if you sell on the wrong day in May, you could look very, very stupid. So it's like, well, sell in May and go away didn't work this year. It's already May 28th, and then suddenly it tops. Or the other way around. It's like, yeah, I know I'm supposed to sell in May, but today is only May 1st. It's not going to happen today, and then it does, right? So just because people say sell in May and go away, unless you were like a position trader like Tyler that actually trades monthly charts, and had this been a 9 this month, I would have already, or this week, I would have already been out. I'm actually curious what the monthly counts are. Oh, it's a sequential 13 from a 9 long ago. So it's something to pay attention to. And I do think that you should be careful with the S&P 500 right now, between sequential, between the monster run-up, and just the simple fact that 3,000 is not going to be an easy number to break. We approached 3,000 in January of last year. So it's possible that it can take us 2 years to break 3,000. But here's the beauty of it, right? The longer it takes us to break 3,000, the more violent the breakout is going to be. So it doesn't matter to me when we break it. I would love to see it broken next year. I would love to see 3,000 broken after Trump gets reelected, because then we can go from 3,000 S&P to 5,000 S&P in a serious hurry. And that brings me back to this chart on the S&P. Once we break 3,000, if Bitcoin is still under, if S&P is still under 3,000 next year, well, the odds start to rise towards 45% that the top is in, but that's kind of unlikely. So the moment we break 3,000, right there, then I think we're going to take off. We're still below 50% though, and we need to get past 5,000 in the next 5 years. We need to get close to 5,000. We actually have to break 5,000, or wait till the year 2025 for me to give a greater than a 50% chance that the S&P is ready for a serious correction. I just don't see it. And I think when Trump gets reelected, we're going to break 3,000 and we're going to take off up to 4,000 in a hurry.
I do too, but just the terminology we're using for listeners is very, very important, because we're talking about direction, not price, and time. Getting both time and price right as an analyst is almost impossible. You need to separate them out with various targets at various times. Now, I've read what Leah was talking about. It was a Bloomberg article. And the reason I'm going to talk about it just for a second is because it was worded poorly, but the points they are making are the ones that Tone is making about all markets and I make about all markets. And what they're saying is that a sub-index called the Bloomberg Grains sub-index tumbled to its lowest level since 1977. The prospect of an end to the crippling tariffs that Beijing imposed on U.S. soy, corn, and wheat exports was one of the few positives for American agricultural markets. China's foreign ministry said that officials were still planning to travel for the U.S. for the next round, but was unable to confirm when amid the delay, blah, blah, blah. But the point is that all these grains, as well as all the commodities we looked at closely, have been in downturns. They didn't specifically say corn was in a 40-year low. They said that a basket, including soybeans, corn, and wheat, had hit 77-year lows. I don't know exactly how they weight that or anything else. So
wait, that seems crazy. It seems absolutely crazy. Okay, I don't know what Bloomberg's doing. I don't know what their agenda is, right? But here we're looking at soybeans. Okay, soybeans opened the year, or let's go 1 year back, right? Let's go to May of last year. Right there, right? May of last year, soybeans approximately $30.50. Today, 27. So what is that percent move? We fell $3.
10%.
That's 10%, right? So that's soybeans. Let's look at corn. Let's go to May of last year. I mean, they're kind of cherry picking the top here a little bit, okay? May of last year, and here we have just under 410. Today we're 360, also about 10%, okay? Here is soybean meal. I don't care about soybean meal. Okay, oats. May of last year, and these are all grains. This is under the category of grains. We're in grains. Oats actually went up from 240 to 277. That's more than a 10% rise. So fine, we'll look at soybean meal. It should be the same as soybeans. May of last year, right at the high, 400. Okay, this one fell 25%. Okay, fine. I don't even know what the hell that is. Rough rice. Again, May, an unfortunate top right here at $13 down to 10. Again, about that's a little more. That's about 15%. But the big ones, right? Like it was just this drop, right? Because look at their index. And the reason why I'm going through all that is their index is down 25%. That is unreasonably high. I don't see the grains down 25% in 1 year in their futures markets. And unfortunately, Bloomberg isn't giving me data beyond 5 years back of their index. But look at their index 5 years back. It's from about $55, $56. I'm going to full chart. What's the price here at the high? 64. It has fallen from 64 down to below 30. It has fallen over 50% in 5 years. So if I go to the grains and we look at a weekly chart and we look at this is actually exactly 5 years, okay? That one has fallen over 50%. So this is 5 years exactly, I believe. It looks like 20, no, a little less than that. 2019 minus 5 is 2014. So we're looking right at the middle of 2014. And we've fallen from 1,400 to 800. Yeah, that's almost 50% on soybeans. And that is not even close to 50% on wheat. And that is not even close to 50% on corn. So I don't know how the hell they price their index, but it looks ridiculous.
Well, what's important is Bloomberg always talks about economic things in a negative way when it comes to Trump. Their point of the article was this had to do with the tariffs. And in fact, that's the way the article starts off, is that soybean and corn futures slumped after tweets from Donald Trump that threaten an escalation, blah, blah, blah. So he's pinning the drop of U.S. farmers' agricultural livelihood on Donald Trump. You just looked at charts that shows that for 5 years, 3 years before Trump was ever elected under Obama, is when the big drop started in the grains.
Yep.
The fact that last year it was more like 10%, they don't mention any of that stuff. So you've just got to be very careful when you're talking about price over time and then trying to find causation.
This is pure nonsense. Like Trump like half of this stuff is up since Trump got elected in price.
Well, can I make a comment?
Wait.
Yeah.
So, right. So typically when it comes to these trade talks, only soybeans and corn. The importance is obviously because of, our corn farmers in the Midwest, and historically the subsidies that we've given to corn farmers. Let's also not forget the importance of Monsanto throughout our history as big industry, big corn. So I'm with you. I think the big takeaway here is simply that, we talk about how news is priced in, the importance of what Trump has tweeted and how it is affected. And yes, it is a basket, but again, when people are typically talking about grains, when it comes to China and the United States, it's just soybeans and corn. But the soybeans and corn in these trade talks have massively affected the markets. And as soon as I would see kind of, personally, please fight me on this, guys, but corn and soybeans, when people start talking about that and news publications start talking about what's happening to soybeans and corn, as a synecdoche, really, of what is happening between the tensions, and therefore potentially precursor to what they're expecting to be happening with markets. And especially when, the tweet came out and they were looking at it as, because it's futures, but looking at what was already happening with the Shanghai composite, et cetera, and then trickling down, and we were down 400 points this morning. Again, I think it is an important metric. I think it's an important metric regarding macroeconomics and economics and importance for this country, because of just that. Actually, the biggest amount of bankruptcies right now and people filing for unemployment are farmers in Midwest, which is also a large base. Now, I will say it publicly, I do think also that Trump will get reelected, but I think that also talking about corn and soybeans and what's happening, not from a historicity and looking at these long-term charts, matters as much. But again, just as a synecdoche of leading you guys in for this show of how much a tweet can really ripple, but also is really representing, in my eyes, this our trade war, quote unquote trade war, and then it gets calmer and then it heats back up. And we've been on this show a lot and talking about the frothiness of the markets and our changes of views between when a recession, what happens with the treasury yield inversions, all these different things. And I usually see that when they're starting to talk about soy and corn, it's the beginning of really just the easiest way for the news to start talking about if our trade war is back on, quote unquote trade war, or just are going between the two biggest economies in the world. Destroy me, please.
Yeah, no, it's fine. No, we do have to move on. Like, we can't just keep talking about soy, because I don't think anyone is really that interested. If it was hitting any kind of a bottom, like the Bloomberg article suggested, it would be interesting from a TA perspective, but it's clearly not. I will say, though, just to close off before we go to Bitcoin, is that Trump is going to get in trouble with the farmers for real in the future, because I think that once he does get reelected and the stock market rises like crazy, I think due to forces outside of Trump's control, because all the other countries are so much worse than the US, all the other countries will be printing so much money, especially Europe, to support their economy, that the US dollar is going to go through the roof to the upside. And then the US dollar is going to go up. Other countries will not be able to afford the commodities. And then the US agriculture is really going to suffer, and everyone is going to blame Trump. And it's not going to be his fault that the dollar is going to go up. And then if Trump or any administration is going to try to lower the cost of the dollar, now they're going to start printing like crazy to join all the other countries printing like crazy that's caused the dollar to rise in the first place. So I'm with Martin Armstrong on this. A rising dollar will eventually cause the end of the US supremacy, because eventually some socialist is going to get in there and he's going to say, we can't have a strong dollar. I'm going to make sure that dollar dies. And he's might actually do it.
Well, speaking about printing money and problems there, do you want some Bitcoin questions? And obviously there was some Tether, but I have a tip for you.
Yeah, let's do some Bitcoin questions real quick. Nothing has changed in Bitcoin the last 3 shows that I did. As you can see, based on a daily chart, yes, we broke out of this We broke out of this guy. All I have to do is just move this arrow up. We reached the target. We are now on an 8 of 9 daily, and we've already started to pull back a little bit. Your only hope is the weekly chart, which has closed above the moving average. We have a full candle opening and closing below the moving average, even though you still have about 6 days to go. And while it's possible that this chart could make it to a 9 weekly, it's possible it can make it to 6,100, the bottom side of the triangle. But the pullback is coming. I believe the pullback is coming before 6,500. I don't expect Tyler and Leah to be paying out on that bet that they did anytime soon. The question is, will they win the bet? And my answer is, I don't know. I am expecting a significant pullback in Bitcoin before 6,500, but how deep that pullback is going to be, I have absolutely no idea. It's actually very possible that the pullback will only come down to 4,200, where it's going to be supported by the moving average and by the 4,200 support. And if that happens, I will end up raising my probability that the bottom is into 50%.
Well, I will probably raise my probability that the bottom's in all the way from 20 to maybe 30%. But I don't think 4,200 will hold. I think we are going to at least test 3,100. And at that 3,100 level, and I'm not expecting that imminently. I'm expecting it before the end of this year, but it could take that long. And it depends on so many fundamental things that are going on right now with regulators and with Tether and the Supreme Court in New York. That's not going to cause a huge move in itself, regardless of which way that goes. In 3 weeks, Fidelity starts their institutional business. That's far more important to the eventual movement of price of Bitcoin than what the Attorney General's doing. But the Attorney General could very easily be a catalyst for a number of other very harsh regulatory proceedings beginning with other AGs as well as the Securities and Exchange Commission. And that's where it's really going to get dicey. Do I know that's going to happen? No, of course not. All I'm saying is that these kind of things can cause the price to go sideways, the way you can see in the charts ever since we broke through 4,200. We've basically been going up to the $5,300 level and then sideways and sideways and sideways. And that's because it takes time to reverse a major trend. The Copic curve is still going down on a monthly basis. The long-term moving average that I use, 30-week moving average, is still going down. The ADX on a monthly basis is still going down. We are still in a long-term downtrend. Now, how close we came to the ultimate bottom at 3,100, none of us knows. But in terms of time, none of us has any idea. Are we talking about next week for something big to happen, next month, 3 months from now, or 6 months from now? I won't venture a guess. Tone is much better at the timing and the cycles of price movement than I am. But I can list right now from memory 50 hyperwaves in which, in the 7th phase, which we are in, they lasted years and years and years and years before they got to where they were eventually going. Some of them, after 30 years, have still not gotten to where they're eventually going. The Japanese market took 27 years to get down to where it was going. And I can give you very, very few examples of hyperwaves that as soon as you break major support like we did at 6,000 and also the phase 2 line immediately forms a bottom. I don't know of any examples. That doesn't mean there aren't any. It's just that the overwhelming probability, now I'm not talking price, I'm talking time, is that we do not begin another bull move for another year or 2 or 3.
Yeah, look, the daily high in coffee in 1997. Coffee is still like, it has never broken that high, and it's still down 75%.
Yeah, exactly.
From the high in coffee, right? And then people talk about how bad inflation is. Yeah, go buy coffee and go buy a Starbucks in 1997.
Yeah, that's exactly right. And even if you talk bubbles, find bubbles that after they burst, immediately start a new bubble. There are a couple of examples, but it's very, very rare. And the reason for that is just psychologically what happens to all the participants. You know, they start out and they got good fundamentals, and then the technicals take over, and then everybody jumps on the boat and it goes much higher than it should. Everybody thinks it's going to go higher. All the media is writing about it, and that's the end of it. And then everybody gets slowly more and more disappointed as the days, weeks, and months go on and the prices keep going lower and lower.
Thanks, Tyler.
I want to pull up Bitcoin dominance, but I just took a look at the hourly chart of Bitcoin. It tops on a 9 about 3 hours ago. That was a nice hourly trade. I actually want Bitcoin to rise into consensus. I have some, friends coming to town that want to buy some Bitcoin, and I'm happy to sell it to them. So I really want the consensus pump. I want this thing at like 6,100 during the 3 days of consensus.
Those are friends, not enemies?
Hey, they're asking. I can't talk them out of it.
Okay.
Let me see. Let's glance at Bitcoin dominance real quick. Anybody have a ticker?
I don't. You could just pull up CoinMarketCap.
Yeah, I know, but I wanted to look at it on, I think they have it here. I forgot what, hold on a second, cryptocurrency.
Anyone in live chat, Leah, have an answer for that?
Yeah, I just got one. BTC.D.
Oh, yeah, there it is. Oh, what is it? BTC.D?
Yeah, it's in the chat, or our chat. There you go.
Nice. Nice 9 right there. Tops on a 9. Bounces on it. So this is a classic 1 to 4 candle correction. And it looks like it's a little bit of an acceleration to the downside here. I actually don't like looking at this as candles. We should probably look at it as a line chart. And so there it is. There's your Bitcoin dominance. And yeah, it's not looking good for Bitcoin at the moment, according to sequential. And like, again, you don't, when you get to one of these 9s, you want a notification that a 9 is here. And then you got to evaluate, is this going to be the type of 9 that's going to turn the trend? Or is this going to be the type of 9 that begins a trend? Because the prior 9 here, while it looked like it turned the trend, it ended up going higher and actually completed a 13. Because that's
Tom,
one.
can you also put on the daily?
Oh, no, this is daily. Oh, it says 1 hour. Sorry, guys. I thought that was daily. My bad. There it is. Oh, the daily is actually looking good. The daily is looking bullish. I didn't realize that was the 1 hour chart. So I I know people are used to candlesticks. Maybe I'll, make them happy. And when the asset is not tradable, I don't like looking at it as candlesticks. I prefer to looking at it as a bar chart. It reminds me that the asset is not actually tradable. And yeah, so you have a 9 here that did not top the market and enter the countdown phase. You had another 9 here that gave you a short correction, and now it's entered its own countdown phase. You're in the middle of another setup phase. I mean, this is looking great. It looks like Bitcoin dominance can go back to the top. This is actually following sequential unreasonably well. Look,
Yeah,
9
look at all
there,
those nines at every
9 there, 9 there. That's ridiculous. I want to go to the weekly chart. How are we looking? Oh boy. Here's the weekly chart of Bitcoin dominance, and it looks good as well. The weekly chart bottoms on a 9. It breaks setup trend. We're on a 5 of 9. This looks beautiful for, and it topped on a 9 as well here. This is where you got to jump to the candlesticks right there. So you top on a 9, you top on a 9. This is the weekly scale. And you bottomed on a 9 doji. And this is great. This is, weekly is bullish. Daily is bullish. Daily looks very bullish. I love this trend. I know we're pulling back today, but it's very good. The 12-hour is what? Doesn't want to update. The 4-hour topped on a 13, but that's a tricky one. It was a double 13 in a row. And the 12-hour tops on a 9. So you're just dealing with a short-term correction. And wow, sequential looks awesome on this. Too bad you can't trade it. And you can quasi-trade it, right? Like if you see the Bitcoin dominance topping, you can like short Bitcoin and go long shitcoins.
Nice. Hey, before we finish up, you want to throw up the S&P?
We glanced at the S&P already. I want to throw up Lyft and talk about Lyft for a minute, and maybe Uber, and maybe another stock or two. Unless you have a specific question on the S&P, Leah.
I have too many questions on the S&P. So throw up.
All right.
Plus, I'm really excited about.
Yeah, what's up? What's up on the S&P?
And you know I'm contrarian to you, so this is going to be super fun. Just some people asking, and then just because of the craziness of today and how it played out and bounced back up, etc.
All right, so
no
what's the question?
specific questions, general.
Oh,
I mean,
honestly, I was busy this morning. I didn't even know there was havoc in the markets, and I'm looking at it now, and I'm like, did something happen? The TA looks good. It tells me we're near a top, but I don't see any catastrophes in the making.
Yeah, we were down almost 530 points on the futures right before the open. And after it opened, it just got stronger all day long. Cut it in half by about noon, cut that in half by the close. And most of the indexes only closed down like 0.5%. I talked to a bunch of clients, consulting clients, that were very nervous this morning. And my thinking was that this was simply a gambit on the part of Trump to make sure that this deal closes, and that the market would end up interpreting it that way. In the interim, Warren Buffett and Charlie Munger were on CNBC because they just had the Berkshire Hathaway meeting, and basically said that all of this stuff is not going to affect the overall direction of the market, which remains up. I agree with that. And so I told people that by the end of the day, we would probably have closed most of the gap. Now we'll see what happens tomorrow and the next day, but I think we've got at least another couple of weeks to go, and we might be able to bring up some things. The Russell actually closed up today. It's gaining ground on the Dow and the S&P and the various Wilshire indexes and the mid-cap indexes because the Russell 2000, the small cap, had been lagging badly. But for the last 3 or 4 days, it's been very strong relative to the rest of the market and was the only one to actually close up today. So in general, just another example of, try not to let the news affect you. The trend of the market is the trend of the market, and these short-term blips don't really matter.
Thanks, Tone. I did throw something. Oh, go for it. And Berkshire Hathaway finally made their first investment in Amazon. It's interesting you pulled it up.
Well, yeah, no, I mean, I took a look. I mean, here's the ES, and I think this is still today's candle. Like, there's no, it's today's candle. It's a weird candle. It's a price flip candle. Like, the daily S&P is telling me not to be in a trade right now. The weekly S&P is telling me to start getting out of the asset, and I'm looking at some stocks, you see, if the stock market didn't look toppy, I would be all over screaming buy Amazon, right? Because you had a 9, you had a 1 to 4 candle correction, perfect. You top on a 13, but now you're still going higher. You're holding up. The moment the next candle starts trading above the new all-time high of Amazon, actually, I'm not sure if it's the new all-time high. It's not, but yearly high. The moment Amazon starts trading at a yearly high, it looks like a buy to me. Google, probably not so much. No, Google is looking like a good buy as well, right? So right here, yes, this was a green 2 above a green 1 above a 9, but it was the day before earnings, and you have to be crazy to buy Google at that point. If you go back to my videos, I said Google can do nothing but disappoint because they were like at an all-time high. Same with Amazon. But now a green 2 above a green 1, it held through earnings, it took the blows, and it's ready to close the gap. So the stocks are looking good. Tesla is always popular. Tesla was a great pickup after earnings. I said the opposite for Tesla. I said Tesla can probably, after earnings or on earnings, has a good chance to rise. And it looks like, Tesla has been beaten up enough, and it's time for Tesla to go up. It almost made it to a 9. It price flipped, had a green 2 above a green 1. It weathered earnings, and Tesla looked like a good pickup on a 2 above a 1. You can now start setting your break-even stop loss. Lyft, tomorrow is earnings for Lyft. I believe it's after market close. The estimates for earnings on Lyft is losing somewhere between $11 a share and $50 a share.
Unbelievable.
And the thing is that it doesn't matter. It's going to be, we're going to talk about, when does Uber go on IPO? Friday? Tuesday? Thursday?
I think Friday is what I heard. I don't have it in front of me. It's coming up pretty quick.
It's going to be interesting. I'm really curious about earnings. I'm not going to say anything else on Lyft right now. Right now, I would not be holding Lyft. There's no way in hell I'd be holding Lyft. Like I said, I was not going to take a chance of buying the 5 above a 4 above the high, even though that's too rich. That's just too far gone for me. So right now, I would be waiting. I would not be in Lyft. I'd wait for earnings, and then we will reevaluate that situation on Lyft. That's pretty much all I have to say, other than I did my webinar. I did my webinar yesterday. That was about 3 hours. I threw out a poll what the next webinar should be, and it looks like the next webinar is going to be TD sequential. We will pick a date sometime either in 2 weeks or in 4 weeks, and we'll do another webinar. Other than that, here is my workshop upcoming schedule. Here is my travel schedule. I'm here for consensus, and after consensus, I will be heading off to Malta, and then Istanbul needs to be on the calendar, and then Bulgaria, and then several other countries before coming back to America for Pork Fest. Okay, maybe Leah will join me there. and Thor.
That sounds epic. That does sound really good. All right. Well, I'll be seeing you in New York.
Oh, I forgot to mention one thing. Tyler, how insane is this? Regulators ready to approve Ethereum futures, the CFTC insider said. Does anyone at the CFTC realize that Ethereum is rebuilding their unscalable platform into a shittier unscalable platform, and all the tokens are going to be migrated?
Yeah, it's amazing. If they are really ready to approve that, it's going to cut everything that they are attempting to do off at the knees.
You can't take these regulators seriously anymore if they can't figure out that Ethereum is a useless, jumbled, unscalable mess.
That is wild. I hadn't seen that. I've got to read about that.
It's also some CFTC insider that's probably not going to be named, so it probably means nothing. Oh no, he is named. Anyway, I got to read the article myself. I just saw the headline right before we went live. All right. We have 1,400 viewers, guys. Yeah, this show went in a slightly different direction. There is nothing really interesting happening in Bitcoin. Definitely check out my last show. And I'm actually going to tweet out some of my videos from 2015 around the bottom, so you can see how my thinking then was similar to my thinking now. And I watched an old video of mine because remember the S&P, not the S&P, back in 2015, right here in January, we bottomed right there. And I was rewatching a video that I did about a week later or 2 weeks later, around January 20th, January 23rd, like a week or two after this low. And I was saying there was a 60% chance that the bottom was in for the bear market. And you think that was an easy call? It wasn't, because people were scared. Some people thought Bitcoin was just going to die.
Well, we don't have that problem today.
That is true. But when we do, I will be 80% in that the bottom is in. All right, guys.
Okay, great. Thank you.
All right, let me stop screen share. Say our goodbyes. Final thoughts, Leah?
It's too loud.
Too loud by Leah. Hey, Tyler, thanks for joining. And I'll see you guys soon. Well, actually, I'm not sure. Tyler, you're not coming here for the consensus, but I'll see Leah soon.
Yay.
Sounds good. We'll be talking. Thanks, everybody.
Thanks,
Bye,
Tone.
Bye-bye.